Shares in Tesla jumped after it reported its fifth quarterly profit in a row. Third quarter revenue hit $8.77 billion, increasing by 39.2% year on year. The electric car maker looks set to reach its target of 500,000 vehicles deliveries in 2020. Joining me to discuss is Tesla shareholder Ross Gerber from Gerber Kawasaki. Ross, great to chat to you. Now, I want to start with your tweet about your full self-driving beta Tesla. Elon Musk tweeted last night that the rollout was underway and that it should be extremely slow and cautious. Tell us what you know, sort of what you're getting and what you're expecting.
Well, congratulations, Elon and Tesla, for finally pushing out this version of Autopilot. And, this is the real deal here. This allows cars to drive on the streets, make intelligent decisions, turn at intersections and stoplights and things, and basically take you from door to door. So it's not quite ready yet. So they've slowed it down, and it is a beta version. So they're letting a few users really get their hands on this thing and test it. And that's how it builds its knowledge, through the neural net, through its AI learning of what's actually happening in the system. So this is the beginning of really an exciting time for autonomy and Tesla as we now begin to break on through to the other side.
Okay, let's dig into the numbers then. Give us your take on the quarterly earnings. I mean, clearly very strong, but were you surprised at just how good the numbers were and indeed the market reaction?
I mean, I'm not surprised on how good the numbers were after seeing the delivery numbers. I'm impressed is a better word, in the sense of, for so long, Elon had been talking about getting to a sustainable position for the company where they wouldn't need capital, they would be cash flow positive, and they would be able to grow their business rapidly without needing to tap capital markets. And he's finally done it, adding 14 billion of liquidity onto the balance sheet with a real smart capital raise. They've got the gigafactories in Berlin and in Austin, being built as we speak, as well as the expansion of China, which has been hugely successful and not talked about enough in the U.S., is how successful the China factory has become, and what a huge contributor to deliveries. And so now Tesla is that company, and it's really exciting, because I think now Tesla, is a big company. It's an over $400 billion company, but it moves on to the next stage as they now build out their global domination of EVs and add autonomy into the mix.
All right, now Tesla said earlier this month that it produced a record number of vehicles and deliveries, as you mentioned, in the quarter, and it's now aiming at 500,000 deliveries for 2020. It felt like quite a far-fetched goal earlier in the year, but now it seems very realistic. Do you believe it's going to achieve its target?
Yeah, I mean, I think it's going to be right around that number, and I don't care quarter to quarter too much. I think the bigger trend is that, Elon kind of confirmed next year we're looking at probably 800,000 cars in 2021. It could be 1 million cars, and with what the capacity they're building in 3 years, I estimate they'll be doing 2 million cars every year. And when you start extrapolating that out, we can see Tesla stock doubling again over the next 2 to 3 years. So, there's a lot of opportunity still in Tesla as it goes from, sort of a startup, shaky company into its mature profit growth stage, which could last a decade. So this could be a really long, fun ride, short term and long term. Of course, there's a lot of risk with Tesla, but, they're changing the world.
So, what are you expecting to happen to the share price from here? Because we've had such a strong year-to-date performance, gains of more than 440%. Surely the stock can't continue at that pace. What kind of levels should we be looking at?
Well, I think that most tech stocks are overvalued right now, so I don't want to get into how much more overvalued Tesla is than Netflix or Zoom, But I think, that being said, Tesla has a shareholder base of people who won't sell the stock. And a lot of that base won't sell under any circumstances. And that creates sort of a bottom here where it just can't go lower, because who's going to sell the stock? All the sellers sold a year ago at the bottom. And so the only sellers are really the traders, or the people who aren't long-term investors in Tesla. So the way I look at Tesla is that this is a great stock to own for the long term. It's a bit expensive because the market is, but on any pullbacks, especially if we can get the stock under 400. We're buyers of Tesla, and we think it's the most exciting opportunity over the next decade in the stock market.
Tesla's research chief, Jeff Dahn, said this week that a 2 million mile battery is possible. When we spoke about last month, I think it was around Battery Day, the stock suffered quite heavily. Some analysts were saying it was because the company failed to mention that much talked about million mile battery. I mean, how significant is this to the Tesla story? And how much focus do you think the company is putting on its development?
So there's one thing that people don't get. It's when people invent new things. And Tesla invented a new battery. It started with the cell development and how a cell is built and what goes into a cell, to how the cell is manufactured, all the way on through to building battery packs completely differently than everybody else. This is one of the greatest innovations we've seen since the computer chip. When has anybody rebuilt a battery? We've been using the same Duracells forever. So the fact of the matter is that this battery production facility is just an enormous opportunity for Tesla. It's huge. And so as they now are vertically integrated and grow from, essentially, taking the raw materials in one end of the factory and coming out with a car at the other end of the factory, they're actually becoming completely self-sufficient and being able to manufacture the highest density, powerful batteries ever created. And so everybody else is going to be using old battery technology except for Tesla, and that gives Tesla a huge edge. And we don't really know what the range and capabilities of these batteries are because they haven't really been built yet. So now that it's being built, the potential is enormous. So we think they're anywhere from 5 to 10 times better than the current battery systems, and this is a game changer.
So in terms of Tesla's supply of lithium, at the moment it's relying on suppliers, of course, in the most part, but it's keen to push down battery costs. We know that because it wants to create a mass market vehicle, which will clearly require a cheaper price. I mean, do you think that the company is likely to start doing more and more of its own lithium mining?
Well, they are. I mean, we know that they've, at least from what I think, is that they've already locked up contracts, long-term contracts with suppliers for lithium and other core materials that they're building. They're also trying to move away from the harder to develop, and mine types of metals to metals that are cheaper and easier to mine. But we have no fear of Tesla's ability to get raw material. There's plenty of these materials in the earth to use, and they just need to get it out in, I think, a clean manner. But other than that, Tesla's already locked this all up. So people underestimate Elon's vision constantly. He's thinking 10 years ahead. He's already locked it all up. So, Tesla is so far ahead of everybody. Actually, they are the only one. They're just the only player.
Do you think that profitability is still a concern for Tesla, or now that it's delivered 5 quarterly positive income figures in a row, that's possibly not so much of a worry anymore?
Yeah, there was a lot of these people saying, look, they only make a profit because of the EV credits. And I said, yeah, well, they get that. That's real money. I don't know why you wouldn't count it. This is the system that we're in. But people have to understand, Tesla's not running their business to be max profitable. Elon says this all the time. I don't want them to be maximum profitable. What I want them to do is invest for growth. I want to see revenue growth. I want to see factories being built. I want to see production going up, because in the end, they can always turn the lever of profits on when they want to. But right now, it's like Amazon 20 years ago. It's just 100% investment into growth. So they control what they're spending, very much so. And they're very focused. And Elon talked about this yesterday, making sure they don't waste money, that they're investing intelligently the capital that they have, and they don't get lazy doing this. And I think, the bottom line is, they're in great shape right now. They're just in great shape.
I mean, it is very impressive to be in such strong shape in a year that's been mired by some extremely desperate economic conditions that took everyone.
Yeah, I mean, we haven't even talked about that. We're in a
mean,
recession, right? We're in a recession during the pandemic, and he's doing this, right?
I know. Well, and I guess my question really is what is the impact that COVID has had on Tesla? Because it appears that it's been a lot more resilient than many were expecting. But what Tesla can't control is the demand picture. And given the challenging economic backdrop, How much is that likely to slow down and really affect the demand side?
Well, there's certainly a legitimate worry with, what I think will be sort of this prolonged, slow growth period, or whatever you want to call it, recovery. So Tesla has a couple advantages because of coronavirus. Number one, they've been pushing down the cost of vehicles, not up. So, as they get cost savings, they push that on to the consumer. So prices have been going down for most of the Tesla models over the last couple years as they get more efficient. So they pass on, those savings to the consumer. Number two, it's the only place you can digitally buy a car online from your phone. So they're the only way, if you want to buy a car on your phone, is through Tesla. So here we are in the digital revolution. Every other car company still got these dealerships that stink. And if you want to buy a car, you just go online and buy one on Tesla and just go pick it up. There's no humans involved. So that's a huge thing just in the digital era. And then the third thing, which I think is actually the cost of ownership of an electric vehicle is almost nothing. And so when you think about paying $80 to fill up your gas tank, or in London, it's probably 100, and then you convert to pounds or whatever currency you're using. And you're like, wow, it's like 200, it's like 50 pounds just to fill up a gas tank. And when you have an electric vehicle, it almost costs nothing. So your cost of operation goes down over time. Plus, you don't have oil changes and brakes replacements and all this kind of stuff. So during a recession, it actually makes a ton of sense to own an EV vehicle. And that's irrelevant for the environment, just solely for the cost savings. So ever since my wife and I got electric vehicles, we can't even tell the difference on our electric bill, and I'm like, this is amazing. We have two amazing cars that cost way less to operate than what we used to with our ICE vehicles. So I think they do okay. I think they do fine.
Very, very final question. It's a point that you already touched upon, which is China, and as you say, possibly not talked about enough by some analysts and investors. And Dan Ives, tech analyst at Wedbush, wrote that China is the heart and lungs of the Tesla demand growth story playing out over the next year. Just talk to us a bit about the importance of the Chinese market and the gigafactory in Shanghai as well.
See, Americans don't like when our lack of intelligence allows our competitors to make smarter investments in the future of technology, which is what China has done in EVs. And so as America's dithered around trying to support coal and oil under the Trump administration, the Chinese have gone all in on EVs, and they've been supporting EV makers in China, and they're supporting Tesla in China because they wanted to have the most advanced EV factory in the world built in China, and that's where it is. Fremont is a kind of a mess compared to the China factory, which is kind of a masterpiece. So not only do they have more efficiency and cost control in China, their labor costs are substantially less, and now that factory's pumping up, and the Asian demand for EVs is enormous because they also have health issues because of all the pollution, and then don't actually have oil, so they have to import oil in China. So it's super efficient for them to be the leader here. They're the leader in EVs. Tesla is the leader in China in EVs. This is the real story. Dan Ives is right. There's going to be enormous growth. Now they're exporting EVs from China to Europe, and that's a hugely profitable trade, making something in China and then selling it in Europe. So yeah, this is going to drive profits and growth for a long time for Tesla, and they own 100% of the factory, the only company in America that owns 100% of their Chinese factory.
That was Ross Gerber from Gerber Kawasaki, who is a Tesla shareholder, joining us there from California. I'm Victoria Scholar, and thank you so much for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.